Oh, officially welcome everyone. Thank you for being here. Today's webinar is Food and Beverage Accounting Practices with Alice Cherng. I'm just gonna give a brief introduction about herself, and I'm just gonna give her the stage so she can properly introduce herself and a little bit more about her background. So, Alice, I was gonna say some stuff about yourself, but I'm just gonna give you the floor right there.
Sure. Sounds good. Hi, everyone. Good morning. I'm so happy to be here. And so a little bit about me and my firm. Um, my accounting practice is AMC CPAs and Consultants. And essentially what we do is we provide bookkeeping and tax services for specifically restaurants and food businesses. I've been doing this for well over 10 years. My background is I'm a CPA. I started with PricewaterhouseCoopers, then went to work for Walt Disney Company, really worked at big Fortune 500 companies. Those Sony, Warner Brothers were all kind of my clients. Then I went to, I started working for a small nonprofit. And that's when I started working in small business accounting. And I just fell in love with it. I just felt that it was a lot more relevant, more interesting, and I felt like I could create more impact. So then from then on, personal journey is that I became a vegan and really fell in love with food in general. Went to work for a couple of vegan restaurants and felt that I liked the operations of it and I knew the accounting side of it. So why not combine the both? So then I started my own practice providing accounting services to restaurants. And that's essentially what my firm does. And we only niche in that industry. It's very unique. And I'm happy here to share my experience and expertise with you.
Thank you, Alice. Guys, I'm gonna keep the chat open. If at any point you have any questions, you can either raise your digital hand or just drop it in the chat. And Alice, whenever you're ready, we can get started.
Okay, great. Do you have the presentation?
Yes, do you want me to present it for you?
Oh yeah, if you can. Oh, I thought, yeah. Can you just put it up for me?
Yeah,
Don't have
just whenever you want me to go to the next slide, just let me know.
Okay, great. Thank you so much.
Give me 1 second.
Okay, while Maybelline does that, I also want to share that 7 years ago I opened a vegan ice cream shop in Hollywood. It's called Dear Bella Creamery. It's still operating today. So I have put everything I learned and I know into practice, and I also operate a food business right now. So I'm very well aware of all the trial and tribulations of owning a food business. And I can totally relate to all the challenges that you may be experiencing as you operate your food business. So I'm going to go through this presentation.
Can everyone see it?
Let me see if I can actually. Do you have the PowerPoint one?
No, I just have the PDF. I can try to convert it if that works.
No. I have the. I'm sorry. I do have the PowerPoint. Let me find it real quick here.
Let me see the chat really quick.
I can
just see a couple of yes in the chat.
Okay, I have the PowerPoint pull up. Let me see if I can present it.
I made you a co-host, so you should be able to.
Okay, let me know if you all see this or not.
Yes.
Okay. Let me maximize it. Okay, here we go. All right. All right. So yeah, I'm going to go through this presentation that I put together, but feel free to chime in if you need any clarification, you have questions throughout. The purpose of this presentation is to give you a kind of a overall background of the sort of the key points of things to consider when it comes to accounting for your food business when you first start, or if you're at the beginning of your process. So they're going to be more broad. Now, if you have any questions specific to your business, that we may be able to do a little bit of Q&A at the end, but this is going to be kind of general that applies to most food businesses. Okay. So, and I'm gonna keep an eye out on the chat if you have any questions, or you can just chime in, but I'll just get started. All right. All right. Yeah, so I already gave you a little bit background. I've been doing this for over 10 years, and we provide bookkeeping, recurring monthly bookkeeping services, and different tax services for restaurants. We have a couple of bookkeepers that specialize in restaurants. I myself am a CPA, and yeah, the business is owned by me, woman of color. Okay. I did give a little bit of background of everyone's business. My understanding, yeah, everyone is a food business here, which is great and really relevant. And it sounds like everyone is kind of starting their business. But if you feel like you have any specific questions you have throughout the presentation, just let me know. Okay. So we're gonna go through basic of restaurant accounting, why it's important and what makes restaurants unique, accounting 101, all the foundations you should know to run your restaurant, how to get started. Should you DIY or should you hire a professional? And some of the common mistakes I've seen the last decade or so that I would recommend avoiding, just to so you're not dealing with any long-term effects in the future. Why is accounting so important? I mean, we all know that numbers is important in account and specifically bookkeeping and accounting, but these are the things that I feel like are why makes accounting so important. Filing your taxes accurately and on time. I mean, it's compliance. I know it's probably not everyone's favorite topic, but I mean, we definitely it is super important because when you don't file things on time, not only do you get hit with late filing penalties, you also get hit with if you have taxes due, you get and you're not paying them on time, then you also get charged late payment penalties, and they really add up. And then there's interest on top of that. So they really start adding up, and I definitely recommend having taxes done on time and accurately as soon as you start your business. And there will be tax and obligations from day one when you start your business. And it's important to know how your business is performing. I know a lot of people operate on a cash basis. They look at their bank account, but there could be so many things beyond that that you may not know how your business is doing without actually looking at a set of books, looking at your profit and loss statements and your balance sheet, and knowing your food cost, your percentage of labor compared to your sales. And all those are important metrics to look at to see if your business is actually profiting and actually operating efficiently. You should be looking at obviously your cash flow, making long-term projections. I know when you first start, you're just on survival basis and you just want to be able to keep up. But at some point, if you want this to be a long-term business, you want to start looking at projections. Can this business survive for the next 5 to 10 years? What kind of sales would you have to do? How many employees would you have to higher, would you grow into multiple locations? How would you expand your business? But if you don't have the data, your current data, historical data, it's hard. That's going to be, it will be unrealistic to make that kind of projection. Keeping your liabilities low. So if you start taking out loans or investor money, to keeping track of your equity, those are all really important things for any business. And then lastly, is to stay compliant with tip laws and sales tax laws. So that's very specific to food businesses. California can be laws can be a little hard to navigate, and there are very specific laws when it comes to tips, how to distribute, how to pay it, and also the rules for sales tax, what businesses must pay it, how often, when to file. All those are really important to take care of. So these are kind of a few things that I find to be unique to restaurants that we'll cover. Point of sales. I'm sure all of you are using some sort of point of sales. So it's important to pick one that makes a little sense to you. Most of the point sales out there are pretty comprehensive. So not only do they accept payments, but they can also provide a lot of analysis that you could use for your business. And of course, it's really important to be able to link that to your books so you can get that real data. Tips, as I kind of talked about a little bit earlier, but tips can be a little tricky if you are starting to operate a restaurant that has front of the house and back of the house, managers, supervisors, who can get how much. That can get a little complicated, and there are a lot of spreadsheets that I've worked with in the past to kind of create to really calculate tips and distribute tips accurately. Sales tax could be due monthly or quarterly, depending on the volume of your business. Delivery apps is kind of something that we all have to live with, and it could be really beneficial, but it could also be challenging, giving away 25 to 35% of your sales. But it's really how consumers are getting a lot of their food now. So to keep track of that, to making sure you're also accounting for all of the service fees and the taxes being collected is important. Merchant account fees, there's not much you can do to negotiate that, especially if you're a small business. But it's also great to kind of compare some different services to see if we can get the most competitive rates. And then your startup cost for restaurants or even food businesses, and you may not have a brick and mortar. There are a lot of things that you're spending related to your business that you want to start tracking, so you can start eventually take advantage of those tax deductions, even if you haven't actually started generating sales yet. So it's these are all kind of things that are unique to restaurants to think about. All right. Entity types. So some of you may have already incorporated, or some of you may not have. These are just sort of the general, the most common entity types I've seen for restaurants and food businesses. And I kind of put this table together, and you can look at it on your worksheet in detail. But I kind of put together what are the why you will consider each of the ones. Most commonly I see is probably sole proprietorship, which is great because you really don't need to file any paperwork to get started, but the liability is pretty high because essentially you and your business are considered the same. So I always do recommend people to incorporate if you're going to take this business seriously and really generate revenue. It's always safer to do it that way, so you can protect your own personal assets. And then there's kind of different things to consider when you start incorporating, to think about the tax advantages of each one. How many investors will you have? How much revenue do you think you would generate? And they all kind of have a different advantage and disadvantage to them. So something you want to think about when you start really generating sales. Okay. So I'm not going to go through all the each detail once you look on your worksheet, but I just want to give you a general table so you can kind of refer to it when you are thinking about incorporating. So this is just kind of very high level of the financial reports that you should be looking at when we talk about accounting for your business. There are three major reports. One is the profit and loss or income statement. Another is the balance sheet, and the third is the cash flow statement. So profit and loss is I think it's the one we're all most familiar with. It shows your income, your cost of goods, which is probably most likely the cost of your food, which then shows your gross profit. When people talk about your margins, it's essentially your gross profit divided by your income. It's like how much profit are you making out of your sales? And then you have your operating expenses, and that's going to be all your salary, your overhead. And then at the end of that, your bottom line is your net profit and loss. Then you have your balance sheet. Even if you operate on a cash basis, eventually, when you start getting loans or grants or investments, you're going to have a balance sheet. So it's important to track that as well, which will look at your assets, your liabilities, and your equity. Finally, it's your cash flow statement. This is not as common, but as I said, as your business become more mature, something also to consider and look at. So, but I would focus on the first two reports as you operate your business. Sorry, I'm getting over a cold, so maybe I sound like a little under the weather. It might be coughing and drinking some water, but just try to excuse me as I get through the presentation. All right. So this is a chart of accounts, which is generally the most common accounts I've seen for restaurant businesses. I kind of broken down to categories. I'm not going to go over the details, but you can look at it in your worksheet. It's important to set up a chart of accounts that's very specific to your business. Not only is it helpful for tax preparation, but also for when you want to analyze your books later and to really understand how your business is doing. So it's important to set up your accounts from the beginning that you find most helpful, and also kind of mimics the tax returns. So nowadays, most accounting are done through a software, and I would say mostly done through a cloud-based software. Some are still done at desktop, but the most common I've seen for small businesses are cloud-based softwares, and probably the most common is QuickBooks Online, which I'm sure we've all heard of. And I'm familiar with all of these softwares, and I've used QuickBooks Desktop and Online for years, for decades. But my firm, we've actually converted to another software called Xero about 8 years ago that I found to be more comprehensive. But honestly, any accounting software you find would be extremely helpful. It's definitely better to have a software than not have one at all. And doing things by books, by paper, or by Excel can get very complicated and can create a lot of errors. So I definitely recommend using an accounting software from the onset. You can link all your bank accounts to it. You can integrate your payroll. You can integrate your point of sales. And eventually, if you decide to hire someone else to manage your books, there will be already easy historical data there. So I highly recommend using accounting software from the onset. A lot of them are either free or pretty low monthly fee to use. That I think it's definitely well worth the extra dollars, a few dollars to maintain your books. And point of sales, as I said earlier, I'm sure all of you have your own point of sales that you're using. I just kind of pulled a few popular ones that a lot of my clients use, and Square is probably the most common one. That's what my ice cream shop uses. It's very user friendly. But I also have seen a lot of Touch Bistro and Toast for more full service restaurants. It's just a little more comprehensive for those kind of businesses. But I've seen all of these. They all work great for restaurants. So as I said at the onset, picking one is important to start using right away. I honestly do not recommend running your business through Venmo or through Zelle. I know it's very common, or it's common right now, but honestly, it's basically impossible to track that sales. And eventually, when you want to file your taxes or start really have your set of books, it would be extremely difficult and time consuming to be able to track all that sales, and then also report sales tax on top of that. So I highly recommend starting with a point of sales as soon as possible. So taxes, the most fun topic that we can discuss. There are different kind of taxes, as you know. I've highlighted 3 most common taxes for restaurants: the sales tax, income tax, and payroll tax. So sales tax, obviously, it's just part of when you sell a product, you have to collect and then pay to the state. But it can be a little tricky because there's so many rules behind it. There could be times when you don't need to pay sales tax, and there could be times when you think you don't, but you really do need to collect sales tax. Like, to go, you don't need to collect taxes for to-go items unless 80% of your sales is not to go. Then you need to collect sales tax. Or if you don't need to collect sales tax if your product is cold, unless 80% of your product is not cold. So it can just get a little complicated. I do recommend. The safest thing is to maybe just collect tax and everything, and then pay for it. But I do recommend hiring someone to help you navigate that. If you feel like you maybe have a business that could be in the gray area of sales tax. Income tax, there's the federal income tax, state income tax, and also city income tax. And I know that it can get very convoluted and complicated. So this is definitely an area I highly recommend hiring a professional to do instead of DIY, just because there's so many to track and so many requirements. But at the very minimum, if you're operating in California, and you're incorporated, you must pay a minimum $800 franchise tax. And that is due on April 15th of every year. If you don't pay that, and then you get hit with a lot of penalty. So I always tell all my clients, make sure you pay this tax in the minimum. Even if you can't file your tax on time, make sure you're paying your taxes on time. And then if you're operating in the city of LA, there's also a business tax just specific to any business operating in the city of LA. And that has to be filed by the end of February every year. And then lastly is payroll tax. I do highly recommend, if you don't have any employees, this is not going to apply to you, but if you do have employees or if you're putting yourself on payroll, I definitely highly recommend using a software to run your payroll. There are just so many taxes that are related to payroll that are complicated and difficult to calculate, that I highly recommend using a software. But those softwares are going to automatically deduct those taxes for you and pay them on your behalf, so you don't need to worry about it at all. So I recommend using a software. All right, get started checklist. So I just put together a little checklist for you when you first start your food business to consider when it relates to incorporation or county in general. We kind of went over a majority of these things: deciding on your entity type, incorporate with your state if applicable, and these are the things that you can go over with your accountants if you decide to work with one. And the bare minimum, like, you can have a consultation with them and then go over your specific business situation or your plan for your business to decide together what kind of entity type you should have. Get a DBA or doing business as, if applicable, and that's something you would file with the city. Apply for an EIN online. So if you're going to operate, even if you operate a sole proprietorship, it is helpful to have a separate tax ID for your business. If you incorporate, you definitely will need a separate tax ID. Open a business bank account. You want to separate your business and personal expense transactions as soon as possible, and we'll go over that a little bit later. Hire an accountant or bookkeeper, or pick your accounting software, as I mentioned earlier. And apply for a seller's permit. If you sell products in, which most of you do, and it's taxable, you have to have a seller's permit. Apply for a City of LA business tax license. This is the thing I was mentioning earlier about the LA, City of LA income tax. That's what this is. Pick a POS system. We went over that. Pick a payroll provider, and then pick a billing software. And this may not be as applicable to you right now if you're kind of just starting, if you're paying most things with your credit card, debit card, or cash. But eventually, when you're operating with a lot more volume, it may make sense to use a billing software like Bill.com to and if you're delegating someone else to pay your bills, that could be integrated with your accounting software, and that could be helpful too. Okay, how to choose an accountant. So we kind of talked a little bit about the accounting software, but this is just kind of give you an idea of if you were considering hiring a professional to help you with your accounting, what you can consider. There is the DIY route, so that's obviously doing yourself and picking an accounting software. It's probably the most cost effective because you're not paying anyone to do it, but it is time consuming, especially if you don't have an accounting background, and it does take you away from operating your business. And when we take over books from a lot of clients, we do see a lot of mistakes from people that have been doing it themselves. So I usually don't recommend this unless either you really have zero, you don't have any enough sales to really hire anyone, or you do have some accounting background and you feel comfortable doing this, then you can do DIY. Then it's the part-time independent sort of employee or contractor. a bookkeeper. So you can probably find someone like this, maybe on Craigslist or Indeed, hire someone, putting them on your payroll part-time. They're going to be a little more experienced, and they most likely have done this for a while. And they're a bookkeeper, and they're going to be a little more accurate, except that they probably won't have as much technical experience. They may not be able to answer any more like technical questions when it comes to entity type or taxes. Most bookkeepers are just familiar with bookkeeping and keeping up ledgers. And most are definitely not CPAs. And also you are going to be incurring employee costs like your payroll taxes and whatnot. Then finally, there's the accounting firm, and kind of like my firm. And accounting firms are going to be, I mean, they're definitely the experts. Ideally finding someone that's familiar with food industry, and they usually have more people on the team, so they can help each other out and be backups. And they're going to be more, there's usually a CPA or two that can answer more high level questions, more technical questions. And they are contractors, so you're not putting them on payroll. And essentially this is what they're in business doing. So this is what I would recommend for businesses that are a little more mature, that have generated enough sales to be able to allocate a small amount every month to someone to maintain their books, and sort of just be their advisor when it comes to anything accounting or tax. Okay. All right, I'm gonna go through some common mistakes and how to avoid them. Meanwhile, are there any questions right now that I can answer?
There is nothing in the chat so far.
All right, great. All right, I'll go through the, okay, I'll just keep going then. All right. So mistake number one is not using a restaurant-specific accountant. So as you've seen through my presentation, restaurants are unique. I mean, every industry has their own unique issues. So restaurant is, yeah, when I first started my practice, I served all kinds of clients in all kind of industries, and they all have very specific things. But when it comes to restaurants, which is what I'm most interested, my expertise are in, and what I'm most passionate in, is they do have specific things that needs to be addressed and looked at at least a monthly basis. So it's important to find someone that really understands restaurants and the needs there. And the solution is to hire someone that has experience working with restaurants. Mistake number two is bookkeeping errors. And like I said, whenever we have taken on new clients and taken on their books, we usually see many bookkeeping mistakes. And that's not unexpected, as most people are not accountants and do not have the background to be able to maintain accurate books. As bookkeeping can be, it's technical and sometimes very detailed. So my recommendation is to be able to automate things and to integrate, like I said, to start with accounting software. And there's so many great cloud solutions now that you can use to integrate everything into your accounting software, so the data is coming directly from the source. And generally, when you do that, there's less errors, just because the data is already coming in from the source and you're not manually entering anything. Mistake number three, commingling personal and business expenses. So I kind of slightly touched upon that earlier on the checklist of opening a business bank account as soon as possible. And the reason is because I've seen in many cases when someone starts a business is that it's very easy and convenient to just mix up personal and business expenses. And what that looks like is when you need to pay for materials is to maybe go to your bank account, your personal bank account, and withdraw some cash and then use that money to then pay for something related to your business. When you do that, it's not only is it very difficult to track, even if you have a receipt, you still have to manually enter that receipt data into your accounting, like your books later. It's hard to track, but so it's very easy to just miss it. And when you miss it, you're losing the tax deduction on it when you are going to file your taxes, right? Um, and and also when it comes, if you ever were to get audited, they will be hard to track that trail. And nowadays, it's not a lot of people are just not using a lot of receipts now, keeping receipts. A lot of it is still done on electronically. So I do recommend opening a business account as soon as possible. Put in your initial deposit, and that's your investment to the company, and you can put in money throughout the business. But to only use that account for all your business expenses is the best way to be able to track your business expenses. So at the end of the year, when you prepare your tax return, you're very clear on what deductions you can take for your business. And if you're going to use credit cards, to also open a separate business credit card for yourself or for your employees for anything related to startup costs or even just working capital operating your business. One thing I want to talk about this is that even if you were to incorporate your business and you consistently commingle your personal business expenses, meaning that even though you are incorporated, you are in essence still operating as if it's your own, it's your personal transactions, then you can potentially lose your liability protection. So essentially, the government is going to think if you're not treating this business as a separate entity, there's no reason that the public should treat your business as a separate entity, and someone could still come and take your personal assets if you're not treating your business separate. So as I said, this is very important to keep in mind when you first start your business. Mistake number 4, using cash to pay for business expenses or payroll. Yes, cash is is convenient, but when it comes to accounting, it is a nightmare. And it's just so difficult for any accountant to track cash payments, that 100% of the time things get lost or is not accurate. So I would say to always minimize cash spending and utilize your debit cards, credit cards, or checks. If you do have to use cash, keep a petty cash log and inform your bookkeeper right away. Report all your cash tips on employees' payroll. So ultimately, cash is, if it's, I would minimize it at all costs, but if you have to use it, you just have to track it meticulously, okay? Mistake number 5 is not filing your taxes on time. And I kind of started this presentation with this note, and the importance of taxes is, I think everyone knows that taxes, they exist, we cannot avoid it, and that if we don't take care of them, they're just going to become this big difficult monster that it's hard to take care of. So I recommend just dealing with it from the beginning and take care of them one at a time as they go. And so it doesn't become overwhelming. If you work with an accounting firm, they will keep you on track. If you're going to DIY, make sure you are marking your calendar for all your tax due dates. And then I highly recommend hiring a professional to prepare your corporate tax returns, especially if you are incorporated, either a partnership or S Corp. I highly recommend having an accountant do that. Mistake number 6, it's not choosing the right entity type for your business. And I mentioned that earlier. This is just consulting a tax accountant or tax attorney. It may not be a big deal when you first start if you're not generating a lot of sales, but as you start generating a good amount of sales, it could be costing you a lot of money to not be in the right entity type. Most likely you're paying a lot more taxes than you have to if you're not choosing the right entity type. So if you start feeling like you're generating a good amount of sales, I would definitely look for a accountant to have a conversation about potentially changing your entity type. Right, and that's it of my presentation in the common mistakes starting of accounting for restaurants. And I'm happy to answer any question if anyone has any.
Any questions? I do have a question. So, will you have any type of advice, for example, for somebody that has a product and is shipping it to different parts of the country? Like, how would taxes being seen from that perspective? How they should be seeing the taxes?
Sorry, you're saying shipping products
Mhm. To
around the country?
different parts, yeah, around the country. Like what is kind of like a best practice to do that when it comes from a tax perspective?
I would say generally, it depends on what you're shipping, but I would think that if you're shipping, most likely you're shipping something cold or frozen, in which case there most likely would not be sales tax, but you would still report that. So when you file your sales tax report, usually quarterly, you would report what's your total sales. So that's your sales for everything. And then there will be a section where it asks you, of these sales, what are excluded, what should be excluded from sales tax. So there are a number of things. There will be things like food items. So these were like grocery food items, for example. Like that's why when we go to grocery stores, a lot of those things are not taxable. So it can exclude that. It can exclude wholesale items; those are not taxable. So that's part. So there will be like a section that's like it will probably fall under the food section, that is like non-taxable food. So there's taxable food and non-taxable food. So this will probably fall under like the non-taxable food section. So you still have to report your sales, but you would just also exclude it and just say, this is the amount that are of the sales that is non-taxable. So they know. So it's important to still track that part of the sales.
Thank you. And I think that answers the question that Corinne put on the chat, which is with pre-packs, good, there is no sales tax, correct? I think it answers.
Pre-package, yes, my understanding is, yeah, most pre-packaged should be no sales tax. So if that's all you do, you shouldn't, there probably would not be a sales tax obligation.
Is that prepackaged food, even if they're like gift things, or because I know that Corinne's package is like a snack food, whereas I might make something that's more like a consumer good gifting food, but it's cold, like you said.
Right. I mean, I have to look, it's like I said, that there's so it can get so complicated when it comes to the sales tax rules that that's something I have to like look into it specifically. Because that's not as common in as I've seen. But yeah, I won't be able to answer that specifically right now. But like I said, um that's why it's so important to work with someone that can like deal with that specific thing that your business has. You know, for I would say that for general food business, if you're serving customers like fresh food, hot food, it's taxable. But if you're pre-packaging, if you're serving cold food only, you're doing frozen food only, that's generally not taxable. So for my ice cream shop, we most of our sales is not taxable.
Thank you.
Yeah.
Any other questions?
I have one. Is my
You
mic-
have a question, Caesar?
Oh, yes, I do. Um, Thank you for your presentation. That was a lot of good information. What is your experience with businesses who have maybe been around for a little bit, but didn't have the knowledge to know all of these things because it is a lot of things, and then you said they all some stuff also change over time. Like, what are these government agencies tolerance on like people who genuinely don't know how to do the right things, and then when they finally catch up and they hire somebody and they're trying to fix what they've been doing for the last 3, 4 years, like how does the government usually react to these kinds of situations if the person happened to make a good amount of money but did a lot of things wrong?
I think it's case by case. I think ultimately, you have to follow the rules, right? I think the government will give you time to be able to probably fix your mistakes, okay? But you will have to, if you owe back taxes, you will have to pay those taxes no matter what, right? You can potentially negotiate penalties, and there are tax attorneys that specifically deal with those things, like they're called conflict resolution. So when you get audited by the government, you get assigned a caseworker, and they go through your books and everything, and they determine how much you're actually owed. They give you time to be able to get your books together and to make your case, and then and then your tax attorney will then help you negotiate what a payment term for those things, right? The and I know someone that does that, and it's the point of what I do is to prevent that from happening, right? So no matter how far in business you are, it's never too late to start getting organized and be compliant. And I think if you were sometime in the future get audited, there's the government can see that there's an effort put in at some point to get things in order, right? And that even if you so I get clients where I have to do books for them for 3 years prior because they just haven't done books at all or file taxes. So I have to go back and do historical for 3 years and then file the taxes, and they're going to owe taxes on that, but then they're fixing it as they go. And it's much better to take care of that early and be proactive about that than to wait for the government to audit you and then try to negotiate something later. Regardless, the government is always going to find out, and because they have the data for all these things, right? They get the POS data, they get the payroll data, they get the incorporation data. So they see this data, and if they don't see that the taxes are being filed and paid on time, and consistently over years, they're going to come for an audit. That's in my experience. So my recommendation is always to get your things in order as soon as you can, essentially.
Thanks.
Any other questions?
I have one more.
Go for it.
In regards to income tax, we currently do not have a separate business bank account. However, we plan on getting it very shortly. We're a very small business, just my husband and I, pretty brand new. Once we have that separate business account and we need to take out money for personal bills and things, do you have to have a set income that you're paying yourself? Can that kind of vary based on your needs for the month? You just need a little elaboration on the income tax.
So it depends on your entity type. So if you don't plan to incorporate, that means that you are operating your business as a sole proprietorship.
We're under an LLC.
So LLC is incorporation. So if you're going to incorporate as an LLC, then that's and if it's going to be you and your husband, it's actually considered a partnership. All right. If it's just you, then it's considered still, you can operate it like a sole proprietorship. It's called single member LLC, which is similar to a sole proprietorship. You operate like a sole proprietorship, but you have a protection of LLC. When you are incorporated, as I said, I don't recommend commingling your personal in business transactions. So I would say you should just kind of set a budget, and then ideally set like a monthly or weekly, whatever you need, draw from the business. So let's say you decide that I want to draw 5,000 a month from my business, then just go ahead and you can draw that. It's clear on your bank account when you see that $5,000 withdrawal, it's your member draw from the business, and that's totally fine. What the government doesn't want to see is you using your bank account to pay for your personal electricity bill, your personal cell phone bill, right? Okay, but if you're going to draw from the company to go into your personal account and then use your personal account to pay all your personal bills, that's fine. And there's no set amount. The government doesn't care what the amount is, because that doesn't affect your P&L.
Okay, and are you paying a income tax on that 5,000 a month?
You're paying income tax on the profit of your business. So the profit of your business is income minus expenses. The draw is not considered an expense, right? So it doesn't matter that let's say your company makes a profit of, let's just say $50,000 a year. If you decide to keep that $50,000 in the bank account, you still owe that $50,000 tax on that $50,000 to the government. If you decide to draw that whole $50,000 and put it in your personal bank account, you still owe tax on that $50,000 profit. So the government doesn't care where that money goes. They're just going to tax you on the profit of the business.
I have a follow-up question to Corinne's question, and then we have one more for Lola Marie. So how will you advise, let's say I'm operating my business from my home, and how would I separate the expenses in that case, do I still need to have a separate bank account for my business and one personal, even if the business is, I'm at home? What does that look like from the IRS side?
I do because there are going to be a lot of expenses specific to your business, especially when it comes to food, your cost of food, your packing material, right? These are specifically your license, if you need to pay for a license. All these are specific expenses just for your business. So I do recommend having a separate business bank account for anything that's specific to your business. Now, if you're operating from your house, and your tax return, you will be able to report any business use of your personal home, right? So that your tax accountant or yourself, your DIY, will be able to calculate, let's say you think that, let's say you use 100 square feet of your house specifically for business, all right? So then you will then calculate, okay, my mortgage and my rent a month is like $4,000, and the percentage of that is going to be business related. So your accountant will calculate that for you when it comes to general expenses like your rent, your utilities, your internet, stuff like that you are sharing with your home and your business. It will be calculated separately. But anything that's specific just for your business should go through your business bank account.
Thank you. And Lola Marie is asking that she was advised by her accountant, who is based in New York, that she'll need to become an S Corp in order to pay herself. She opened up her business as an LLC, but now she's an S Corp. But she's curious to know if that was the correct information.
S Corp is my recommended entity type for most businesses when you get to a certain volume that you can't afford to pay yourself. Yes. I personally think that it is the best tax saving vehicle to incorporate as an S Corp. But of course, but the caveat is that you have to be able to afford to pay yourself, right? When you are an S Corp, you are required to pay yourself as an employee. If you are not making enough to be able to pay yourself a consistent salary, then you should not be an S Corp, because then you get penalized for not putting yourself on payroll. All right. So I generally recommend, if you are starting to make, let's say, over $60,000-$70,000 of revenue a year, then that's probably the time you should be considering converting to S Corp.
She said, thank you for the breakdown. Are there any final questions? All right. Okay. Well, thank you so much, Alice, for this information, and I hope that you feel better soon. Guys, I'm gonna keep you for another minute, and then I'll also let you go. Alice, thank you so much. Have a good one.
Thank you so much. It was so nice to meet all of you. Good luck with all your businesses. Bye.
Bye. Just quick update. So guys, we're gonna see each other next Monday on April 2nd for costing CPG recipes for CPG products. For those of you who have a consumer packaged goods, this is your webinar. If you have prepared goods and you don't want to join this webinar, feel free to do so. And then the webinar for costing recipe for non-CPG goods is going to be the following week on April 8th. And on April 15th and April 22nd, we're going to be seeing cash flow and access to capital, and that is for everyone. So the same goes for those who have a CPG product, doesn't want to come up to the known CPG recipe cost webinar, you're also feel free to do so. And a little housekeeping, our first check-in is going to be in May. The exact dates will be TBD. You will be receiving an invite just to schedule a quick call with me to see how things are going with your advisors and to check in to see if you need any additional support. Does anyone have any questions or any final comments before we go? Okay. Well, thank you so much, guys. Have a good rest of your day and your week. Bye.